Welcome to XYPN Radio, where your host Alan Moore brings you into a community of fee-only financial planners who want to profitably and successfully serve Gen X and Gen Y clients. If you're ready to get the knowledge you need from leaders in your field, learn from forward-thinking advisors, and take action on your own goals, XYPN Radio is the show for you. Here's your host.
Hello, and welcome to this episode of XYPN Radio. I am your host, Alan Moore, and today I'm excited to welcome Rick Frisbie on the show, the newly minted CEO of Robust Wealth. I first got introduced to Robust Wealth at our conference last year, where they did a sort of pre-launch, and they have hit the ground running since. Robust Wealth was founded by one of Rick's previous employees at Franklin Templeton, but they eventually talked Rick into making the leap into startup tech world to come run the company. I'm always intrigued by the careers of folks that have worked in investment banking, since it's a world that completely baffles me, and I've never worked in anything remotely associated with investment banking, but it's where a lot of our industry got its roots and a lot of where our advisors came from. We talked through Rick's career that led him to his current CEO position, and then talked about the future of technology in the advisory space. So much is happening, and it's always fun to hear from folks that are actually developing new technology for advisors on not only what they're working on, but also what they see coming down the pipeline. You can find any of the additional resources that we mentioned during the episode at xyplanningnetwork.com/83. In addition to the typical resources, you'll find a link to our recently launched book, co-authored by Kitsis and myself, titled The Monthly Retainer Model: What It Is, Why It Works, and How to Implement It in Your Firm. This month's podcasts are brought to you by one of our favorite sponsors and reigning swag champion of the 2016 XYPN conference, Robust Wealth. Robust Wealth is the unique, robo-enhanced complete wealth management platform that provides advisors with all the tools they need to run, grow, and succeed, including a complete technology stack and portfolio management and rebalancing as a sub-advisor. Utilize Robust Wealth and their partners' institutional investment models or customize your own. Sign up for demo mode and test out their free technology stack at www.robustwealth.com. Robust Wealth, the complete wealth management platform. Climb on. Also be sure to go to xyplanningnetwork.com/VIP to join our private group just for XYPN Radio listeners. You can interact with other listeners, ask us questions, and more. Hey, Rick, welcome to the show, man. Thanks so much for being on.
Yeah, I really appreciate you having me. Thanks a lot, Alan.
So I'm excited. So we were talking, or I was talking with Stephanie, who's the marketing manager or director of marketing there at Robust Wealth. And we were sort of going back and forth on who to talk with. And she had introduced you. And I didn't realize that you were the newly minted CEO of Robust Wealth. So congratulations on the new job title.
Yeah, I'm excited. I'm really excited. Anxious, but excited, like any great athlete before a big game. So yeah, just joking. But no, very excited. So it's good stuff.
You know, it's exciting for me to start seeing companies, what's the best way to say this, real businesses sort of growing in the planning space. So our last couple of episodes actually have been focusing sort of on this shift from practice to business and how, firms are growing from just being an owner advisor to actually becoming real businesses. And, I will say the vast majority of RAs have never had the conversation of like, should we bring in a CEO? No, the founder's the CEO. The founder's always the CEO. But it's like, well, it's actually not how businesses are always run. And it's kind of cool to see some of that, I guess, the business mentality coming into the planning space. Mm-hmm. So I guess to kind of kick things off, tell me a little bit about sort of your career path. And I guess we'll go from start to finish on how you ended up at Robust Wealth. So have you sort of always been in the investment management space? Has this sort of been your career?
Yeah, I have. I kind of first job out of college, I went into the management training program for Franklin Templeton back in the early 90s in San Mateo, California. Moved from the University of Virginia to my first day at work in the Bay Area. And I was
Beautiful area.
Yeah, thanks. No, the Bay Area is great. So I went through their training program and ultimately ended up in their institutional sales division and moved up. The firm was growing and growing over the years. When I first got there, it was just Franklin. And in 92, they bought Templeton, which was a big transformational acquisition that gave them a big global footprint and sort of officially made them a global asset manager. And throughout the 90s and into the early 2000s, I was part of the institutional group, and we were lucky to be growing quite nicely. Benefited a lot from the move in the 401k defined contribution market and the variable annuity markets to more multi-manager, open architecture, investment-only type platforms. And so we were able to get in a lot of plans and realize a lot of asset growth. And I ultimately wound up being the president of their retirement division, which grew to be about $100 billion business. And then in 2005, I moved up into the corporate suite area and became the CAO of the company, Chief Administrative Officer. That was a lot of corporate development and planning, strategy type work, kind of corporate board level work, deciding with the income statement whether to build something and, realize the expenses for building out different businesses, or use the balance sheet to buy something and use balance sheet dollars to do M&A. So did a lot of M&A transactions, and it was exciting dealing with the, investment bankers and that type of thing. Ultimately, we made the decision strategically that we wanted to get into the multi-asset solutions business and make a big push there, as well as build out all our alternatives business and do a lot in liquid alternatives, sort of mutual fund type options for investors. And we bought a firm in Stamford, Connecticut called K2, which I moved out there and grew that business from 2012 to 2015 and had some real good growth there. We were able to put together, a very nice multi-asset business that was able to win some mandates, around the world in the US and had good growth there. But one of my employees in that capacity was a real wonderkid, Mike Cairns, who left me, unfortunately, when he did. I had a tear in my eye to go do a startup and create an automated wealth management platform, aka a Robo. And he went back to his native area around Princeton, New Jersey, to do it and created Robust Wealth. I invested in it and I sort of watched the platform hit all its milestones and build out quickly. So the premise of the platform was to build something that had real sophisticated institutional quality multi-asset investment processes to it. So we wanted to be able to deliver risk-based model portfolios where the RIA could choose, a conservative or moderate or aggressive kind of prefabricated portfolio from us. We wanted to have it not just be cash, fixed income, and equities, but also include some alternative asset classes to aspire for return diversification and risk mitigation, because obviously we were at the end, we think, of this sort of 35-year secular fixed income bull market with rates, and as well, the 8-year bull market with equities. So we think it's important that we're entering sort of a new alpha cycle to be able to incorporate those types of strategies. But we also wanted the RIAs to be able to create, if they wanted, their own portfolios, and we can just run those on the system, and they can build out their own risk-based investment frameworks that are bespoke to each of their individual clients and do that in a very easy way. Or they can build for and personalize in a bespoke way, again, for each of their clients, glide paths that are goal and risk-based as well. And they can be different glide paths. They can be a glide path for retirement or a glide path for, say, if you want to have a ski house, in 12 or 15 years or that type of thing. So it was important to us to focus exclusively on the advisor market. So we didn't want to build a B2C model, and we did not want to disintermediate anybody. And it was also really important for us to be able to deliver it in a private label fashion, so that the RIA felt like it was truly their site, and that, just as importantly, their clients felt like they were dealing exclusively almost with that RIA. But ultimately, it was our engine running it. And we wanted it to be very open architecture. So if the RIA has their own asset allocation models or asset allocation frameworks, they can load that onto our platform and we can run that and do all the rebalancing for them. Or if they like to use outside asset managers, kind of our partners firms, we can load those onto it and use them. So it could be Robust Wealth's own capabilities, the RIA's own models, or the frameworks of some of the big global asset managers out there. And we're very open architecture about that. So very neat business. We were able to start it up with some funding from different RIAs who really bought into the idea. And they gave us obviously a lot of good guidance and feedback as to what to do and not to do as we built it out, all the features that they wanted to have and see and be able to use. They said, things like being able to help them with billing with the custodians, being able to help them with taking low cost basis securities rather than having the client have to turn those into cash, liquidate those, and realize the taxable event would be very helpful. So we really wanted to build out real strong value added features, and we've been able to do that. So it's been exciting and, a lot of progress so far.
It sounds like it.
Yeah, thanks.
So it sounds like, so just to recap, so you were at Franklin Templeton, and then so your employee, it sounds like, went off, started Robust Wealth, you were an investor, and then they were able to sort of pull you over recently to actually sort of run the company. So what was it about this opportunity for you that was attractive enough to leave what sounds like a pretty cush high-level position at Franklin Templeton? So, I mean, what was it about Robust Wealth that made you want to come over?
Yeah, well, Franklin Templeton was amazing to me, and I had an awesome career there. And they, just were exposed me to so many different parts of the business, and eternally, forever thankful for that. I was particularly excited about this opportunity because it feels like the convergence right now that we're seeing in asset management of technology with traditional asset management is just such a real transformational event, and to be able to get in on a business that, has a very strong, robust, if you will, platform that has, been hitting its milestones, bringing on assets, had a good sort of foundation in terms of investors, both institutional venture capital as well strategic RIA investors, to me was just really exciting. And then, I think that the world, talking again about asset management here, this move towards the bespoke where, some clients are going to want more of an asset allocation model that's already been in place, and that's perfect for them. And then sometimes the client or the RIA is going to want something that's built just specifically for that client, whether they get a ranking on a risk scale and it's sort of a risk-based investment framework, or whether they get that personalized glide path that's really based on their needs. I think it's really neat and exciting to see the market moving in that direction and see so much sort of demand and enthusiasm around, the creation of the bespoke for the individual investor. Just like an institutional investor will get a portfolio created for them that's just singularly for them. I think that as we see that move into the individual channels, that's just something that's really exciting. So kind of all of the above, it just felt right. And you just have a lot of kind of converging forces right now in the market that just kind of led me to make the decision.
Yeah, it's so interesting to me, this quote unquote robo space. I guess, do you like the term robo-advisor, or are you anti that terminology at this point?
No, I'm automated wealth platform sounds a little fancier, but I think robo, robo is the kind of the vernacular in the market. And I think it's certainly fine by me. I'm not too proud. I think it does a nice job of kind of conveying what it is. I think the only mistake would be there are different providers out there that have different levels of services. So, every platform is a bit of a snowflake and brings something different to bear. So my only sort of one reluctance would be that if robo kind of conveys this sense that we're all the same, because I don't think we are. But I think, the market's sophisticated and they get that. So it's probably just something I shouldn't be concerned about.
Yeah, we've sort of seen, in the early days, it was sort of the separation of Betterment versus Wealthfront and how they wanted to sort of differentiate their services from each other. And then you throw in Motif, which had this sort of piece of their corner of the market where you could build out certain models and, whether it was mainly for day trading or it was more for, investing in certain sectors or whatever, you could leverage it for that. And so basically Robust Wealth is trying to carve out its corner of the market. And it sounds to me like learning a little bit from the mistakes, or I don't know if it's mistakes, but maybe decisions that some of the other platforms have made. And one of those being, I would not want to be in the B2C space at this point as a technology provider. It's such an expensive, the cost per client acquisition is so high to try to get someone to use the robo-advisor that I think, being an advisor-facing platform to me makes sense. And I'm not aware of any others that started out as B2B. There may be others I'm just not aware of. But so how do you differentiate yourself from some of those other, underneath that robo umbrella? Not that you're, it's not necessarily better or worse. It's just different. Like, how is Robust Wealth different from some of the other major players that are out there right now?
Yeah, I think what you see from us is that we are really geared towards it's 100% of our business is advisor driven and will be, it's going to be in perpetuity advisor driven. Our backgrounds come from those types of channels. So we think that we get the sensitivities, sensibilities there of the advisor. The fact that like I said, we're funded by some advisors was very helpful in terms of their ongoing feedback for what we should be able to deliver out into the market. Being very private label, hugely important to us. So we don't want the end using client of the advisor to be seeing our brand all over the place or our watermark or that type of thing. We really want them to feel like they're dealing exclusively with their advisor's solution. So I think that's all very, very important. Being able to take in low cost basis securities without making their clients have to realize a taxable event is important. Offering features like customized fee schedules where the advisor has complete control over being able to create different tiered fee schedules across all of their different clients, I think is important and something that they want and is unique to the channel. So there's a whole host of things. And I think just kind of being in a world where you're just very cognizant of what the advisor needs in terms of client acquisition, we're not a first mover. So coming in, we wanted to be, kind of lean capital usage and be able to deliver all of our services exclusively into the one channel that we sort of feel like we know well and where we kind of grew up. And so all these things kind of aggregate, conglomerate, if you will, to just kind of lead us to focus on that channel. I think there's, a lot of different, ways to go at the market. And certainly there's a lot of, good, strong, formidable competitors out there. But, for us, what we thought would be kind of our blue ocean where we could really just be focused was really the RIA and just in general, the advisory market.
Right. No, that makes perfect sense. And I'll say that as a younger advisor getting into financial planning, and I love talking to college students or recent grads that just get into their first RIA and they sit down and they open up, Goldmine, a CRM, which hopefully no one here is still using. Sorry to everyone at Goldmine, or DB Cams, which probably hasn't been updated in a decade, and all these other systems. Like financial advisory businesses are so behind in just with their technology that, one of the things that Betterment brought to the table is they blew everyone away because they could open an account without it taking, 30 days. And it's funny to me that that was mind blowing at the time, because if we looked at, if we were in the business of ordering a pizza and it took us 30 days to order a pizza, we would never stand for that, right? We don't understand this concept of, things taking forever and having to get wet signatures and sending paperwork back and forth and paperwork getting lost because you can't submit it online. You have to mail it in or whatever. Right. Or to move an account, you got to go get a medallion stamp. Who even still has those? It's just, it's amazing to me just how far behind we are and how long it's taking to get things moving. And is it really, I guess in your mind, is it the long-standing, systems and processes and legacy data and legacy systems that exist at the big players is just so entrenched they're just never going to get it, and the only way we're going to get cool tech is honestly it's just I have to get started from scratch? Is that really it? Are we just waiting for new players to get started, or are we waiting on the existing big companies to actually give us something new and something different and something that resembles other industries that are actually keeping up with technology?
I think it's going to ultimately be a combination of both. I think it's a great question. I think, kind of the push from nimble upstart technology companies, certainly financial services, the industry as a whole is ripe for that. And you're seeing a lot of that right now. And I think, in working and integrating with the legacy providers, vendors out there that are part of just the historical vendor ecosystem of financial services, I think it pushes them along to do things differently and do things more quickly. And they get it. We're set up to be multi-custodial, and as we go through different integrations, it's a push. And, we want to be in a DocuSign paperless transaction environment. Obviously, by definition, everything that we're doing is, kind of a daily rebalancing, up-to-date sort of environment. And that's just the expectation clearly of, the average. I completely agree with you. The average 20-something, the average 30-something, they're not going to stand for it. And that's just, It's going to be their expectation. And it's going to be either just a head scratcher or downright frustrating for them when you're not able to deliver that. So it's a big push. And sometimes you feel like it's glacial, but then when you kind of pan out, zoom out and look, there's been a lot of progress that's been created and driven to make things, sort of catch up, if you will, across the landscape of investment management. I think, when we look back in 18 months, 2 years, we're going to see a lot of progress that's been made by both, kind of new entrants into the industry from a fintech technology perspective, as well as just a lot of the legacy big players just kind of updating and upgrading their systems and operations and how they just kind of conduct business with the consumer.
Yeah, it's funny to me because I totally agree that we're going to see a lot of progress, and it's just nice that our denominator is so low right now that like any progress is amazing progress in the tech space. Like I'm just constantly amazed by how far behind we are other industries, even to the point that like banks now, I mean, you get a home mortgage online without actually talking to anyone now, and yet like client portals, we still don't have decent client portals or text message archiving. Like I still can't text my clients. So it's just funny to me. And I guess that's just the space that we're in, and we all get to sort of capitalize on that if we could push it forward. But there's so much room.
No, there is. And I mean, I think there's just a lot of sort of legacy systems, no great revelation out there that kind of hold things up. And then we, of course, are in this sort of multi-regulatory environment with lots of different regulatory frameworks across the different providers. And that has, varying levels of impacts in terms of how expeditious, your business can be. So financial services are it's a unique space. It's by, definition and often given some of the, crises over the, that we've experienced, it needs to be highly regulated, and that has a big impact on it all. So there's just a lot of things that sort of conspire to bring together, the uniqueness of financial services and some of the kind of glacial pace that it can move at. Sure.
No, it's absolutely true. And, one of the things was 2012, 2013 is really when this robo-advisor phrase got coined. I think Bill Winterberg and Michael Kitces, I think, were involved in that phrase in that term sort of getting laid out there. But everyone was afraid. I can't even describe how many advisors I talked to that were just like terrified in their seats that the robo-advisors are coming to take our clients. And Wealthfront put out some article, or was it Wealthfront or Betterment put out some article about how they were coming after the advisors' clients. And there was all this fear. And I think that's finally settled down. I think we finally realized like, oh, look, I actually don't know anyone that's lost a client to a robo-advisor, because if you lose your client to a robo-advisor, you probably didn't have much of a relationship with them just because the service model is so different. So the first fear was robo-advisors are going to take out the advisor. So now we've come to realize advisors are fine. Now we need to improve and we need to leverage the technology, but it's not going to, robos aren't going to take all of our clients overnight. I guess what do you see as what the robo-advisor platforms are going to disintermediate? I mean, is it going to really go after the core technology? So if you own a rebalancing software out there, you should be afraid. Is it going to disintermediate the custodian even, or the mutual fund manager? I mean, where do you sort of see the technology going?
Yeah, I think, and I have seen some of those articles that, from vendors saying, oh, we're going to go after the advisor. You don't have an advisor. We couldn't disagree with that more. We think it's completely mutually compatible, and it's just technology enhancing the advisor's practice. So one of the folks who does some speaking for us is an ex-fighter pilot, used to fly the F-22 Raptor, and he has a nice bit about, it used to be the F-15, you needed two people in the cockpit, needed the pilot to fly the plane and the weapons operator sitting behind to shoot the missiles. And, with single seat cockpits like the F-22, because of technology, the pilot actually does both far better. And so we think being able to deliver, an automated wealth platform only helps the practice but it needs to be flexible. So some advisors are going to want to focus on new client acquisition and new AUM growth and have a platform that does all of the rebalancing and that sort of quote unquote heavy lifting for them. Other advisors still want to be able to offer a very hybrid investing engine and platform, and they want to be involved in the process and be involved in the recommendation of ETFs and mutual funds and different types of asset allocation frameworks, and be able to show to the client that their clients that they're, adding a lot of value on that front. So you get the hybrid model. I think that it will almost sort of conversely, initially folks thought, oh, well, this is just going to be a boon for the ETFs. But as platforms get more sophisticated and can offer more investing vehicles, like not just ETFs are great and, will always be probably the bulk of the inputs that robos use, but there's certainly areas where you can have a lot of alpha created above and beyond some of the kind of beta bubble parts of the market asset class wise. And so you're going to need to be able to deliver other investments, mutual funds and the like, and even some, if you want to build out even more kind of thoughtful from a modern portfolio theory standpoint, even some alternative capabilities. So I think that robos, what you're going to see is that they aren't just going to be the old version 1.0 TAMPs where it's, convert everything to cash and we'll put it in an ETF portfolio for you. You're going to see them become more and more sophisticated in terms of what they're able to offer. But the technology is going to allow the advisor to just be that much more efficient with their time and the servicing of their clients and the acquisition of new clients for their business.
Yeah, I wouldn't, and I was sort of alluding this earlier, but I would not want to be in the business of owning a performance reporter or a rebalancing software in this day and age because, robo-advisors are just so much better at it than basically what we used to do in Excel, which is essentially where a lot of these programs came out of.
Yeah, well, I agree. I think you see with a lot of advisors, whether it's a startup advisor, younger advisor, or it's a, breakaway advisor from, a brokerage system or something along those lines, is they get into this new business and they realize that they're dealing with a lot of just, modular vendors that, just create a lot of administrative headaches and take away from their time to do what they do best. And if you're able to deliver for the advisor, things like taking care of the billing for them or you just get them out of this sort of spreadsheet environment and focusing on things that don't add value and grow the business. And if you can kind of take care of that for them holistically, you have a good chance of building a great, just kind of partnership that goes forward in time with them.
Yeah. And the other piece to this too, that I wonder is that when I look at the future of robo technology and some of the abilities that are being built in terms of block trading and the ability to streamline some of the operations that, have honestly just burdened financial planning firms in the past, I do wonder if, kind of the big group that we're not really talking about is the fund manager level that, being able to automate. It still baffles me that I can't go buy the S&P 500 no guns because I have a client that just doesn't support guns, but they don't care about any of the other stuff. And it sort of starts to get into the social impact investing, but the ability to say I do want a heavy tilt in wearable technologies or, self-driving cars, but I want to stay out of, vice and we can't do that. But yet y'all are building the technology, I think, that will allow us to do that. It's not quite there yet, but it will be there. And when that happens, what happens to all the fund managers? Because suddenly we just took what they're really good at, which is compiling a bunch of individual stocks and, getting paid to do that. I guess, do you see that same vision, or do you think the robos will kind of end up going a different direction? I don't know. Just curious your thoughts on that.
Yeah, no, great question. I think that you're definitely going to see this push, and it's just inevitable towards things being more and more bespoke and the client having more and more control, both of their, outcome they aspire for, but in terms of the vehicle that they're using as the medium to get there. And that's just, you see that with the new entrants into the market. You see that with the take up. You see that just in terms of demand and the expectations, especially amongst, 20 something and 30 somethings where they're used to being able to, as a consumer, be in that type of environment where they can drive and personalize a lot of what their, experiences as that consumer. So I completely think that, fintech, that's the catalyst for it. It's a big part of the future. And I think other things that, were always a burden for advisors like, volatility harvesting or tax loss harvesting. I think that's just, that's a big push in our platform. And you're just going to see that become more the embedded expectation and not something that's unique. about, a platform or two in the market. It's all just part of this groundswell, which is what's, so exciting with everything going on in financial technology today, just as you have this kind of usurping of the legacy model.
Yeah, and there's so much room for disruption, but we also tend to be an industry of folks that move very slowly, especially the independent RIA space. In talking with other technology vendors, it's a tough space to be in because we have advisors that have, was like quote unquote successful firms. They're sort of where they want to be. They could adopt new technology. It would save them some time, but they don't really care, right? They've spent 30 years doing it the way they've been doing it. The median age of an advisor is 57 years old. So they're sort of all in this approaching retirement, like, why bother? And yet all of us are coming up behind them going like, please, please, please make this technology. And I know the tech vendors are going, yeah, but there's no money to be made because no one will buy it. And so it is such an interesting space. I know I'm being hard on the financial planning industry just in terms of its technology, but I can't imagine being a client on the other end of what we give them a lot of times that like, a stripped down basic client portal is like the best we can do. And that's the best money can buy because it's the only thing money can buy. There's only one out there. So anyway, enough of the ranting, but I'm fascinated to see where we go from here and sort of, if we look back in 18, 24 months, 60 months, whatever it is, and just sort of look back and see, did the robo technology ultimately just become the platform that advisors run their businesses off of? And we're not talking about all these different pieces anymore. Did it become the new custodial model and disintermediate the custodian, and suddenly Schwab and Fidelity and TD Ameritrade are trying to figure out where their business went? I don't know. It'll be fun to watch. But one thing I do want to do is, you've mentioned the term bespoke a couple of times. Could you define that for listeners if they haven't ever heard that term before?
Yeah, when we think of bespoke, we think of that as being creating a glide path that's completely unique and personalized for the investor. And then we also think of it, and that's more combining both the aspirational return to get you to your wealth projection where you want to be, and the amount of risk that you're willing to tolerate, you as the individual, so bespoke along the way. And then there are a certain number set of investors who don't necessarily want a glide path, but they have just risk tolerances. And this gets into the old academic research around behavioral risk tolerance, but they have their own specific risk tolerances. And so you have to thoughtfully go through that with them, the amount of volatility that they're willing to accept, the amount of drawdown risk that they're willing to accept, especially, when you have, as we say in the asset management business, 100-year storms seem to come along every 5 years. So when you're going to have the inevitable crisis to deal with. And so you have to build an investment risk framework that is specifically scored to that investor. So to us, that is what bespoke is. It's very granular. It's a portfolio that's completely unique for the individual investor based on their risk tolerances and their aspirational sort of outcome return preferences.
Okay. So it basically is like fully customized investing beyond just 60-40. It's and
Yes.
Even the bucket strategy of separate goals, it's sort of incorporating all of that into a singular investment strategy that allows customization among different goals, different bucket strategies, different risk and return assumptions, all of that sort of piled into a single system.
Yeah, exactly. And it's, sending them on their own glide path that isn't prescribed. It's not the old target date fund here. We're just going to put you in the 2040 fund with everybody else. It's creating their own glide path based on, it may be a parabolic glide path that's steeper, closer to retirement because they're willing to accept more risk. It may be, kind of go towards the more linear, that type of thing. It may get, much more conservative as you get closer to your end date, that type of thing. But it's always something that's very unique to what they need and what their needs are. And it's kind of looking at their own personal balance sheets, income statements, their wealth goals on a client by client basis and building something only for them.
So one of the things that we hear a lot about is the research showing, millennials care a lot about socially responsible investing. So, millennials love SRI. It's a big passion of theirs. My experience in working with some older clients around SRI was they would say, could we get SRI? And we'd say, well, you're going to have to give up some return for that. And they go, no, that's fine. We'll just keep our old models. So do you, one, I guess, is the research really showing that the market is shifting into this more social impact, socially responsible investing, whatever we want to call it, but that we're sort of shifting that direction. Are y'all doing anything to sort of prepare to be able to manage portfolios in a way that support SRI, or is that just sort of talking points that we've been talking about, but ultimately it's not really coming to fruition in terms of what clients are asking for?
Yeah, I think that SRI is real and that younger generations are, and this is empirical. It's not just, an opinion. I think they are much more SRI cognizant in their investing. I don't think that the industry as a whole has done a great job of solving for them. And so you'll see different vehicles out there that will have, securities in them that at first blush, when you look at them, you think that doesn't seem like an SRI investment wise in my, SRI fund. So I think that, as an industry, we haven't necessarily delivered to them or for them what they're expecting. I think there's some, or I know that there's some upstart SRI investment firms that, have done that while they don't have the scale yet, or they're more at the boutique level, have done a great job of creating portfolios that, regardless of whatever screening process you use, when you look at them, common sense tells you, hey, that's a real SRI fund that, adheres to those types of values. And so that's something that we are working on very much so to make a part of our platform in discussions with a particular firm. And, a lot of those firms have great performance. They've been able to, I think it's a misnomer. And again, this is more just the empirical. One of these, as the business school professor said, you can debate it or you can just go look it up. But there are definitely SRI, providers that have beaten and added positive alpha to broad-based indices and have been able to do that on a consistent basis with good investment quality. So that's out there. It needs to be embedded in platforms like ours and delivered to the consumer because there's real demand for it. And, I think if that's a part of your platform, and we very much want it to be a part of our platform and are in the throes of doing it, it's just one more value add that's going to resonate with the buyer.
Yeah, and I know the struggle right now with SRI is that everyone's version of SRI is different. So, and this is why it sort of gets back to values-based investing, is that everyone's values are different. So therefore, it's not just, give me the SRI model. It's, I really want to support female-owned businesses. And so let's focus there. Or I want to, support businesses that have progressive maternity and paternity, policies. And I want to really focus I want my money going to those companies because I want them to succeed. And two, I want to support them and I don't want to support others. Do you see, I guess, is the technology coming to get to that granular? And I know there's these boutiques out there that say they're sort of in that space, but anytime I hear boutique, all I hear is inefficient. And maybe I'm just wrong on that, if there's only one doing it, it's kind of hard. I just feel like we need the technology to do that level of filtering and management, or maybe I'm just overstating it.
Yeah, I don't know that that's a totally valid point. We're not there yet where on a broad-based level, there's a lot of competitors out there, clearly no great revelation, that are able to deliver that level of customized to, what you're looking for, when you have sort of that progressive mindset, but you want to really create a portfolio that's that focused on your particular set of beliefs and you want to be able to reward those companies. I do think that is inevitable. And I think that, directionally we're headed there, but it's, kind of early innings for sure. It is, given the demand for sure, it's a bit of a head scratcher why we're not, further into the game, getting towards the, the middle of the order or the middle of the game. But I am bullish and do think it's an inevitable based just on, what you're seeing out there and, where a lot of the capital is going to, be able to support those types of companies with those types of aspirations to be able to deliver that.
Well, now that we have dove in and done some tech development ourselves, I will say that anything tech related can be built. But just because you say, I'm making it sound much easier than it actually is. I imagine if, someone got on the scene and they said, this is what we wanted to build. As you've seen, it's very expensive and it takes a very long time to get those sorts of things built. So I don't know, maybe somebody's working on it and, just not aware of it. It'll be out soon. But it does seem like that's sort of it's the hopeful direction, I guess, that I have aspirationally is that, I believe you should be able to see yourself in your portfolio if that's your vision. And the flip side being some people are okay and just Vanguard index funds, but just going to Vanguard and buying a bunch of index funds isn't sufficient. That may be right for what you're actually invested in, but to your point, in being able to actually connect all of that to your financial goals is the piece that we've been missing, that I think finally the technology is now coming along, and Robust Wealth is certainly involved in this and giving us the ability to sort of tie it all together.
Yeah, no, absolutely. And I think we've seen a lot of excitement from the venture capital community, institutional funding coming from them towards these types of solutions, these types of, financial technology solutions. And I think that you'll continue to see, strong investment in those areas just because there's real demand out there. And, those that can solve for it, stand to kind of prevail in the long term.
Sure. So I guess, what does Robust Wealth have on the radar? Because it sounds to me like, y'all are out of beta. You've sort of gotten the base built that you wanted built. So I guess, what's next? What are y'all hoping to accomplish over the next year or two? Obviously no trade secrets or anything, but just, I guess, what's sort of the goal in terms of the direction y'all are going? Or have you sort of hit where you want to be technology-wise, and now it's just a push on the sales and marketing side?
Yeah, the platform is largely built. We've been trading, live money going back to October. The great news is having pre-existing RIA clients who are also investors in the business. They've given us a lot of guidance, and we're able to begin taking on AUM and already be revenue positive, which has been great. So it wasn't the type of platform where it was the vaporware, go into the garage, build it, and hopefully
Right.
They will come and unleash it on the market. And, either great things happen or there's a resounding silence and just crickets, and it's all anticlimactic. So the features that we've been pushing through and adding, which we think are features unique to us, sort of value added for the advisors that you don't see out in the market, are by and large all in place. We have one or two to go, but on very short, within the next few weeks, they will be in place. So, middle of the first quarter, we are, open for business and out there trying to acquire new RIA partners to work with. I think that, it should be a year for us based on where the platform is and the growth we've had to date. If we can keep that trajectory going, fingers tightly crossed, it should be a very successful year for us. So it's good. I think that the future is bright, and I think there's definitely, a place and a lot of demand for the type of platform that is completely private labeled on behalf of the advisor, that offers really sophisticated investment solutions, but then takes care of a lot of the, what were once kind of the unwieldy modular services that you had to go get from different vendors. And by being able to integrate all that, it's a good platform, for advisors to really focus on growing their businesses and being successful and more efficient in that regard.
Awesome. Well, I'm really excited. I was excited when y'all debuted. Did you actually launch at XYPN 16, or you were just there sort of previewing what was to come? Because we had our conference in late September, and I guess y'all actually went live in October.
Yeah, so it was right then. It was, we were at the final finish line. It was the perfect convergence to be with you guys, because we were telling the story about something that was, just going to be trading live money on 10/1. So it was a very exciting time for us to be there. Yeah, it was just, and that was all. I'm not saying we're so bright or thoughtful that we came up with. It was all very serendipitous, but the timing couldn't have been better. So yeah, we were definitely strutting around at your conference with a hitch in our step, because the platform hit its MVP, its milestones, and it felt great.
Yeah, it's amazing how hard it is to hit those milestones. So to actually get one on time as a tech company always seems to be challenging. But I will say, Robust Wealth can go down in history as showing up with the best swag to a conference that we've ever seen, because we ran a swag competition, because I go to other conferences that are not financial planning related, and they always have good swag. And you always want to go home with stuff. My dad sells police cars for Ford, and the sheriff conventions have better swag than planning conferences. And so we're like, you know what, fine. We're going to do a big contest, free booth in 2017 to whoever, wins the swag competition. Whoever basically attendee vote. And it was a clear consensus. I've got my Robust Wealth backpack sitting next to me. I now travel with
awesome.
So it makes the rounds. But
we're trying to build our brand around, being active, being outdoors. Most of us are mountain bikers and skiers and boarders and that type of thing. So I'm sure, the swag is very much of the sort of outdoor ilk, and it does seem to resonate with folks. So that's great feedback. I really appreciate it.
Well, it's nice to see a fresh take on things. And that's really been our mantra at XYPN is, some days it feels like we picked a lot of fights in the industry, that we went out and we said, yes, we can serve young people. Yes, we can be fee only. Yes, we can be planning focused. Yes, we can work virtually. And it's nice to see others sort of getting involved in that fight as well and saying, kind of tired of hearing that's the way it's always been done. I don't really care anymore. I have such limited respect for legacy, and it's probably a downfall of mine that I need to care more about where we came from. But the truth is, I just sort of want to know where we're going and quit talking about the past. But that's because I'm a millennial and we're all self-serving and all the other negative things they say about us. So, well, Rick, thank you so much for taking the time to be on the show and share about your career path and sort of Robust Wealth and what y'all offer and the direction you're going. I really appreciate you taking the time.
Yeah, thanks a lot, Alan. It was a real pleasure, real privilege. Really appreciate the opportunity to have the conversation. It's just great spending time with you guys at the conference, and really look forward to just keeping the relationship going. And thanks for everything.
Sounds great. This month's podcasts are brought to you by one of our favorite sponsors and reigning swag champion of the 2016 XYPN conference, Robust Wealth. Robust Wealth is the unique, robo-enhanced complete wealth management platform that provides advisors with all the tools they need to run, grow, and succeed, including a complete technology stack and portfolio management and rebalancing as a sub-advisor. Utilize Robust Wealth and their partners' institutional investment models, or customize your own. Sign up for demo mode and test out their free technology stack at www.robustwealth.com. Robust Wealth, the complete wealth management platform. Climb on. Be sure to join our VIP community at xyplanningnetwork.com/VIP to hang out with other XYPN radio listeners, ask questions for future mailbag episodes with myself and Kitsis, and to finally find a community of like-minded financial advisors. Thanks so much for joining me today. We'll see you next time.
You're not alone, and you're not crazy. It's scary starting, building, and growing your own financial planning firm. And that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.